What's up, guys? Welcome to my channel, Mortgages with Mike D. In today's video, we're going to talk about 5 things to avoid during the mortgage and home buying process. Now, before we dive into it, if you find any value in this video, learn anything new at all, do me a big favor, give me a thumbs up, give me a like, and subscribe to my channel. Would be a huge help. It would honestly mean the world to me. So without any further ado, let's get into today's video. Now, many of these might seem pretty obvious, but you'd be pretty surprised because they happen more often than you would think. Number 1, don't apply for new credit. You should absolutely avoid this by any means necessary. Reason being is because when you apply for new credit, it's going to show up on your credit report as a new inquiry. But you might be thinking, well, they already pulled my credit, so it shouldn't be an issue. Here's why that oftentimes is a misconception. Because if you're buying, for example, new construction, that can very well take 4, 6, 12 months from start to finish. Now, from the time that the lender originally pulled your credit and gave you that pre-approval, they have to refresh or update your credit and pull it again. Because in most cases, most loan programs, that credit report's only good for 120 days. A lot of things can happen. A lot of things can change between then. So that's why the lender puts that in place, saying, let's re-pull the credit, make sure nothing crazy happened. And now if they notice that credit inquiry, that part's not really the issue. The issue is whenever someone pulls your credit or checks your credit, there's a chance it could hurt your credit score. So if your credit score went down from the time that they pulled your score the first time, you might now be in a less tier, meaning your interest rate can change, which can increase your monthly payment. It can change the terms. You might not be eligible for the loan program that you once qualified for. And, worst of all, if you were really close to being approved based off of your score, and if it dropped just a few points, whatever the case may be, you might not be eligible anymore. And the other thing is, so not only just applying for new credit in terms of it might hurt my score, but don't go buy a new car or finance large purchases. It happens more often than you would think. And this is important because by adding a huge debt like a new auto loan, you might not be able to qualify anymore because the amount of debt that you currently have compared to the new housing payment that you're trying to qualify for, it might be too much of a debt load relative to your income that you were qualified on. So, and what that's referred to as your debt to income ratio, DTI, which I don't want to get into the details. I'll make a separate video explaining what that is, why it's important, how it's calculated, so on and so forth. But the main thing is, don't apply for new credit. Don't take on new financing because it can jeopardize your approval. Number 2, and very similar to what we just talked about, don't co-sign for anything because it has the same effect. Now, a lot of times people think, well, I'm just a co-signer, right? I don't actually make payments. I just did it to help a friend or family member because they couldn't get approved for a car loan, student loan, house, whatever the case may be, but he or she makes the payments every month. I'm not responsible. Now, that can be problematic because technically as a co-signer, there is an obligation there. It can directly hurt you. All things being equal, try to avoid co-signing for things when you're in the home buying process because it can throw off your approval and jeopardize your ability to actually settle on the loan. Number 3, refrain from making large deposits or large cash deposits. This is also known as mattress money, right? A lot of people don't believe in savings accounts, checking accounts for whatever reason, and they just leave money in a safe under their bed, and they decide they're going to buy a house. So now they're going to open an account or deposit that money into an account. That's a big problem because the money might be legitimate. You might have worked hard and saved it over time, If we can't prove where the money originated or came from, we unfortunately can't use it. The lender calls this sourcing. So if they can't source a deposit of 5, 10, 20, whatever the case may be, they won't allow you to use those funds. So an example, if you have $50,000 in your bank account and there was a $20,000 deposit that we can't support where it came from, instead of getting credit for $50,000, they're only going to give you credit for $30,000. So if you need to bring more than $30,000 for closing, now you have to figure out where that money is going to come from. And you might be asking, well, why? Why do they care? It's my money. It's a fair point, but ultimately they need to prove that the funds are legal, legitimate, they're not from any suspicious or shady sources, because if they can't, then the guidelines say unfortunately we can't use it because we can't trace it. It all comes back to a paper trail, so it's important to be proactive in terms of keeping everything organized with your finances. It just makes the process a lot easier. So again, avoid making large deposits because it's just going to create additional obstacles that you don't want to have when buying a house. It's already stressful enough, so avoid it. Number 4, change jobs without telling your lender. So changing jobs is common, happens all the time. We have a lot of borrowers in the past that switched jobs during the process, still closed on time, no issue. But it's important that you let your lender know, because when you were originally pre-approved and qualified, it was based upon your current employer, your current income, your current role, so on and so forth. So now when that changes, we have to update your file and update your approval based upon your new details. Who's the new employer? What's your new income? What's your new role? All that stuff, we have to make that update. So if you don't let us know and we just happen to find out days before closing, because the lender is required to re-verify your employment leading up to settlement just to make sure that you're still employed. And if they call your employer and they're like, sorry, Mr. Smith no longer works here, and they find out that way, you're probably going to have to delay settlement. It's an issue because now it has to go back into underwriting. Now, again, changing jobs during the process isn't what's really the issue. It's more so you not being transparent and communicative about it. The only time it can really be an issue if you change jobs is if your income decreased or dramatically went down. If it's the same or went up, generally not an issue. Assuming you're still W-2, you're still kind of in a similar line of work, it won't pose any problems, and you're working with someone that knows what they're doing, you'll still close on time. Just make sure you let them know that you changed jobs. If not, it can be quite the fire drill and scramble leading up to settlement that you can easily avoid just by letting them know. Finally, number 5, don't severely or dramatically increase your credit card balances. Now, it's kind of similar to the same concept of, applying for new credit or co-signing for anything. And what I mean by that is you don't want to increase or add to your debt. So if you severely increase your credit card balances, it's likely, and it wouldn't be surprising, if those minimum payments went up. So if your minimum payment required was $25 a month, that's what the lender is looking at when they're looking at if you're able to afford the house or not. Now, if that minimum payment goes from 25, to 100 or more because you made large purchases, that can jeopardize your ability to qualify now. Because again, if that debt to income ratio is tight, little changes like that, you might think, $2,500 a month, $75 a month isn't a big deal. But if we were just getting by, and now that change happens, it can very well be the difference of being approved or not being approved. So I hope all this information was helpful. I want to make sure I was able to get this content out to you prior to buying or refinancing. Please keep these 5 things in mind when going through the process. I hope you found this helpful. If you, again, found value, appreciate the video, give me a thumbs up, subscribe to the channel, and we'll see you on the next one.